Breaking news. The financial world is buzzing with a story that's turning heads everywhere. In a twist absolutely no one predicted, tiny British companies, once considered the underdogs of the global market, are now outpacing their big American rivals. The tables have turned, and the world is watching in disbelief as the UK's small but mighty businesses take center stage. UK small cap stocks, which for years were overlooked and dismissed as unexciting, are suddenly the stars of the financial world. Investors who once ignored these companies are now scrambling to get a piece of the action. While everyone's attention was glued to the S&P 500 and the relentless rise of American tech giants, these British underdogs quietly staged a revolution. They've been working behind the scenes, building momentum, and now they're crossing the finish line ahead of the pack. For years, investing in the UK felt dull, even disappointing. The market was seen as sleepy, with little excitement or promise of big returns. Many investors simply looked elsewhere, convinced that the real action was happening across the Atlantic. But this year, everything changed. The script has completely flipped. UK small caps are now leading the global pack, leaving even the most seasoned Wall Street analysts stunned and scrambling to explain the sudden surge. After a rough start and years of being overlooked, these companies have roared back to life, delivering returns that have forced even the harshest skeptics to sit up and pay attention. Their comeback is nothing short of remarkable. The forgotten stocks are now the talk of the town. Financial magazines, newspapers, and TV pundits can't stop talking about the UK's stunning rebound. Suddenly, everyone wants to know, how did this happen? This isn't just a small win, it's a seismic shift in the global financial landscape. The ground has moved beneath investors' feet, and the old rules no longer apply. 2025 has shattered old wisdom. The UK is no longer just a place for steady dividends and quiet retirements. It's become a hotbed of growth, innovation, and unexpected opportunity. So buckle up. The story behind this incredible comeback is wilder, more dramatic, and more inspiring than anyone could have imagined. Stay tuned, because this is just the beginning. Let's rewind to spring, a season of renewal, but also, as it turned out, a time of uncertainty for investors. The air was fresh, flowers were blooming, but beneath the surface, financial markets were anything but calm. UK small caps, those nimble companies that often fly under the radar, suddenly found themselves in free fall. Inflation was surging, and interest rates were climbing higher than anyone had expected. Investors, already jittery from months of economic headlines, panicked and started pulling their money out of riskier assets. The result? A mass exodus from small British companies. It was as if the entire market had decided these businesses were too risky to touch. Storefronts sat empty, trading floors were eerily quiet, and it seemed like the story was over before it had even begun. But then, something unexpected happened. The UK small cap index staged a dramatic comeback. While the US market seemed to be stuck in neutral, drifting sideways with little conviction, UK small caps roared back to life, catching everyone off guard. So, what changed? The US dollar, once strong and dominant, began to weaken. This shift made UK assets suddenly look like bargains to investors around the world, who were eager to find value wherever they could. With the pound gaining strength and UK stocks trading at attractive prices, global investors saw an opportunity. Not only were these stocks cheap, but the currency exchange offered an extra boost to potential returns. Meanwhile, across the Atlantic, the US was grappling with its own problems. New tariffs tangled up supply chains, making it harder for American multinationals to do business efficiently. Factories slowed down, and uncertainty grew. UK small caps, on the other hand, were largely focused on serving local and European customers. Their limited exposure to global trade disruptions meant they could keep operating smoothly, even as chaos reigned elsewhere. Large UK companies managed to weather the storm, and mid-caps performed even better, but it was the small caps that truly shined. These smaller firms, often overlooked and underestimated, became the stars of the show. Their agility and focus on domestic markets allowed them to adapt quickly and seize new opportunities. By staying close to home and avoiding the worst of the global trade drama, UK small caps found themselves perfectly positioned. Their insulation from international turmoil made them the right stocks at exactly the right moment. Investors who had the foresight, or perhaps just the luck, to stick with these companies were rewarded handsomely. It was a powerful reminder that sometimes, thinking small can lead to big wins. In the end, UK small caps outperformed their larger peers and international rivals. Their nimbleness, resilience, and ability to adapt in turbulent times proved that even in a confusing market, opportunity is always there for those willing to look beyond the obvious. Sometimes, the underdogs, the companies everyone else ignores, end up crossing the finish line first, surprising everyone and taking home the trophy. That's exactly what happened here. In a tale of two markets and one very confused dollar, the overlooked became the overachievers, and the smallest players delivered the biggest results. Let's be clear, there was no sugarcoating the mood as the new year dawned. 2025 started with a whimper, not a bang. The city felt subdued, almost as if the gray skies were reflecting the nation's collective anxiety. The UK economy was barely growing, inflation was stubbornly high, and investor sentiment was at rock bottom. Every morning, headlines screamed about rising prices, stagnant wages, and a cost of living crisis that just wouldn't quit. Business leaders looked tense, and ordinary people felt the pinch in their wallets. Financial news became a daily parade of doom and gloom. Analysts on TV debated whether the UK was the Titanic, except as some joked grimly, this was after it had already sunk. The sense of uncertainty was everywhere, and hope seemed in short supply. Money was fleeing UK stocks for safer shores. Investors, spooked by the headlines, pulled out in droves, especially from small-cap companies that were seen as too risky and too exposed to a weak economy. Trading floors were eerily quiet, and the red arrows on market apps told the story. No one wanted to touch these stocks. The fear was palpable, and the mood was one of deep caution. But as any seasoned contrarian knows, when pessimism is at its peak, opportunity often lurks just beneath the surface. History has shown that the darkest moments can be the best times to act. Valuations for solid British companies hit absurd lows. Many strong businesses were trading at prices that made little sense, simply because fear had taken over logic. Yet, the disaster everyone feared didn't materialize. Instead, things just got a bit less bad. The economy stabilized and a glimmer of hope returned to the headlines. That was the bet. Buy when everyone else is running away. It's never easy, but it's often where the best rewards are found. Sometimes, the best bargains are found in the darkest moments, when others are too afraid to look. Against this bleak backdrop, I started shopping for opportunity. I looked for value where others saw only risk, and as the market slowly turned, those early moves paid off, proving once again that fortune often favors the bold. Shopping in a market everyone hates, you need a system. My tool, Stockopedia. It scores thousands of UK stocks on 3 proven factors: quality, value, and momentum. Quality checks for strong, stable, profitable companies. Value hunts for bargains, stocks that are cheap for good reasons, not just because they're broken. Momentum finds stocks already moving up, with analysts getting more optimistic. Stockopedia combines these into a single stock rank. My strategy? Focus on stocks with high scores across all 3. It's like using a metal detector to find gold in a junkyard. In a beaten-down market, this system helped me spot the hidden gems. No guesswork, just data-driven decisions. That's how I navigated the chaos. Tools are great, but rules keep you afloat. Rule 1. Only buy stocks with a stock rank of 90 or higher. No exceptions. Rule 2. Diversify. No more than 4 stocks from any one sector. This spreads risk and avoids disaster if one industry tanks. Rule 3. Sell ruthlessly. If a stock's stock rank drops below 70, it's out. No questions asked. Review monthly, cut losers, and bring in new top-ranked picks. The portfolio is always evolving, filled with the UK's best small caps. It's systematic, disciplined, and keeps emotions out of the process. No guarantees, but it's a logical way to ride the market's ups and downs. These rules are my arc, built to weather storms and sail toward profits. Stick to the system, and you avoid sinking with the ship. That's how I stay afloat. And it works. Theory is nice, but results matter. My benchmark, a UK small cap index ETF. Early in the year, my portfolio fell even harder than the index during the crash. That's the risk of a concentrated, high-momentum strategy. But when the rebound came, my portfolio surged ahead. Money flowed into the strongest companies, exactly what my system targeted. While the index dragged along weak stocks, my picks captured the upside. As of November 9th, my QVM portfolio is up 28.4%. The benchmark, 14.1%. That's a 14-point edge. Active stock selection is risky, but sticking to the rules paid off. The lesson: trust your system, even when it feels wrong. Discipline beats panic every time. The real story is in the stocks that delivered. My winners came from unexpected places: materials, IT, and defense. Axminster Mining, fictional, doubled as demand for specialty metals soared. Data Secure Solutions, a cybersecurity firm, thrived as digital threats grew. Precision Ordnance, a defense supplier, boomed with rising global tensions. These weren't glamorous picks, but they were perfectly positioned for this year's challenges. Each had high stock ranks and rode powerful trends. A systematic approach uncovered these winners in overlooked sectors. Sometimes, the best performers are hiding in plain sight. That's the power of a disciplined process. Is this just luck, or is the UK set for more outperformance? First, UK stocks are still much cheaper than US ones. There's room to grow. Political stability has returned, reducing risk and attracting investors. New trade deals are quietly opening markets for British companies. The Bank of England is signaling rate cuts, which boosts small-cap growth. Defense spending is rising, fueling key UK industries. Recent economic data shows the UK pulling out of its slump faster than peers. Combine cheap valuations, stability, supportive policy, and sector tailwinds, and you get a compelling case. The UK's time in the investment wilderness may be ending. This could be the start of a strong decade. The fundamentals are finally lining up. Let's get real. Don't go all in on UK small caps. My UK small cap portfolio is just 10% of my total investments. The rest is diversified across global stocks, bonds, and more. Diversification is rule number one. Don't gamble everything on one risky bet. UK small caps are volatile and can drop fast. They're also less liquid, making it hard to sell in a panic. Value traps are everywhere. Some stocks are cheap for a reason. Stockopedia helps filter out the worst, but no system is perfect. Use small caps as a tactical boost, not your core. Stay disciplined, stay diversified, and never bet the farm. The market always finds new ways to humble you, so play it smart.